Hello everyone. This is the pre-market report video for 21st December 2022 in terms of Nifty and Bank Nifty. First, in short, let's see what happened yesterday. Please have a look at this chart. It's just yesterday's day's movement for Japanese major index Nikkei. The cursor was at 3:15 am GMT, which is equivalent to 8:45 am IST. As you can see in the graph, between 8:30 am to 8:45 am Indian Standard Time, Japanese index dropped to more than 3% or over 700 points in 15 minutes. I mean, it exactly happened 30 minutes before our market opening. So this is what pushed the global momentum into deep red state. And that's why even our Nifty opened a gap down of over 100 points. Now the reason. For those who saw the last pre-market video might remember this. In the items we need to look out for, we discussed about the Japanese interest rate decision to release at 8:30 am Indian Standard Time, and the expectation for the Bank of Japan was to keep the interest rate to negative 0.1%. They did keep the interest rate to negative 0.1%, and Bank of Japan was keeping the negative interest rate from 2015 onwards. So that is not a problem, and that's a welcoming sign. But the problem is, after that they announced their policy stance. I mean, generally for Japanese 10-year yield curve, there is a band and Bank of Japan maintains that band. Please have a look at this chart and the band in it. So this is what till yesterday, the band is 0.25%. Here, what happened yesterday was they increased this band to 0.5% from the previous 0.25%. This overnight policy stance change strengthens the yen by 3%, and also it opens the door for Bank of Japan to do or increase the rate hike in 2023. Basically, this pushed the global momentum into deep negative state. I guess it's a little bit complicated, but I tried to explain it very simple. Hope you guys understood. As a result, yesterday early morning, this made all the global major index, including India, into negative state. Just for info, yesterday Germany's wholesale inflation PPI data comes as 28.2% against expectation of 30.6%. Again, this data is sharply lower compared to that of the September month inflation, which is near 45%. This is really very positive, and because of this, European major index cuts all its losses, but still it closed negative. Only UK SPITSE closed marginally positive. Then coming to US market. Last night, US Census Bureau released the number of new building permits that was issued by the government in the November month. Basically, this building permit is the key indicator for the demand in the housing market. The data comes as 1.34 million compared to last month's 1.51 million. Again, this is sharply lower compared to the day before yesterday's analyst forecast, which was 1.48 million new building permits. This is very good data. So in the US market last night, it's the combat between their own good macro versus the Japanese bad macro. And because of this, all three US major index closed flat to positive. Dow Jones increased by 0.28%, S&P 500 was up by 0.1%, and Nasdaq closed very flat. And this strengthening of yen made the dollar index to drop to 103.5. However, 10-year Treasury bond yield increased by another 3% to 3.7%. Regarding oil, it's roughly the same as day before yesterday. WTI crude oil was traded at $76 per barrel, and Brent crude oil was traded at $80 per barrel. Since at present, the issue is with Bank of Japan's stance and its impact on US market, which has nothing to do with the Indian market. The previous day positivity regarding the Indian stocks is still valid and intact. And thus all Indian areas closed really positive. Both banks and IT areas increased from 1 to 2% in the US market. Then regarding SX Nifty, at 3 am Indian Standard Time, it closed at 18,450, and there is no premium at present with respect to spot market. So based on that, it's kind of indicating 65 points gap up opening today. There is not much India related news that I know and that can impact. It's just only one. Yesterday in the aftermarket hours, one of the major global rating agency, Fitch, affirms BBB- sovereign rating for India. They also said that India will grow at 7% in FY 2023 and 6.2% in FY 2024. They expect RBI to maintain the interest rate of 6.25% in throughout 2024. It means there will be no more interest rate hike by RBI. This is all positive, but there is one negative. They mentioned that Indian government will slip to their fiscal deficit target, which is 6.6%. But honestly, I don't believe that will happen, since so far this year our government had a very good tax collection. Over 10 to 15% than that of what they normally do. Anyway, as a summary, US market fights back now. SX Nifty is indicating the gap up opening, and even Indian areas are indicating the positive IT and banking sector. As I said earlier, yesterday's negativity in Indian market was nothing to do with US market or for that matter with India related problem. It was mainly caused by the issue in Japan. Today in the aftermarket hours at 8:30 p.m. Indian Standard Time, there is a schedule for release of various US related macros such as CP consumer confidence and existing home sales data for November month. Then at 9 p.m. Indian Standard Time, US crude oil inventory related information. This will directly affect the oil prices. So these are the items we need to look out for today. Now coming to technical, on the daily chart, both Nifty and Bank Nifty forms a reasonable bullish candle. Nifty forms a hanging man or otherwise we can call it as a bullish hammer candle, which is again another bullish reversal candle for the second consecutive day. 18,450 is the important breakout level to watch out. Again, as I said yesterday, if it passes above 18,650, then we can say for sure the return of positive trend. But still, the present is the indication of bullishness comeback in the market after a small downward correction. Then coming to moving averages and technical indicators. For both Nifty and Bank Nifty, the summary is as same as last 2 days. At present for Nifty on daily chart, moving averages summary is still neutral and sell on technical indicator summary. Then for Bank Nifty, both moving averages and technical indicator summary, it's a buy signal. Then about RSI, at present for Nifty, the value marginally dropped from 50.5 to 49, which is neutral. And for Bank Nifty, the same. The value marginally dropped to 58, which is still a buy signal. From option change in open interest, in case of Nifty, huge put option unwinding took place at 18,400, whereas significant new call option open interest were added at 18,800, 18,300 and 18,500. I cannot able to conclude anything here. So let's see the overall open interest chart. More nearby put option open interest is present at 18,300 and however at the same place significant call option is also present. I mean it's a short straddle. Because of those reasons the next nearby maximum put option is present at 18,200. So 18,200 is the visible support. Then about maximum nearby call option open interest without significant put option open interest is present at 18,600, 18,800 and 18,500. Hence 18,500 is the immediate resistance and 18,600 is the strong resistance for this expiry. About Bank Nifty, the story is very similar. Significant put options unwinded at between 43,300 and 43,500 and significant new put option open interest with more new call option open interest are added at 43,000 mark. Anyway, again here too we cannot able to conclude anything. So from overall open interest, 43,000 got maximum nearby put option open interest and 44,000 got maximum nearby call option open interest without any put options. So 43,000 is the support to look out for and 44,000 is the resistance to break. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and it will also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I am doing it for my and viewers educational purpose only. Thanks for watching.